The U.S. Consumer Price Index slowed its rise in July. On August 10 local time, the U.S. Bureau of Labor Statistics announced that the U.S. Consumer Price Index rose 8.5% in July compared to July of last year. It was lower than the increase rate of 9.1% in June, which recorded the highest increase in 41 years. Market economists expected 8.7%. The U.S. consumer price inflation rate rose to the 6% range in October last year and has continued to rise, jumping further to the 8% range since March. In July, the core CPI rose 5.9% from the same month last year and 0.3% from June. The U.S. Federal Reserve considers the month trend of the core CPI when determining monetary policy. The core CPI excludes energy and foods, which have high price volatility from among the CPI. As the U.S. Consumer Price Index slowed sharply in July, the likelihood of the U.S. Federal Reserve raising interest rates by 0.75% at the time has also decreased. Instead, it is more likely to increase by 0.50 percentage points. In this mid to long-term inflation pace, it is still unclear whether the U.S. pricing level has definitely passed its peak in July. In April, the U.S. Consumer Price Index was 8.7%, which was lower than the previous month, but rose again to 8.6% in May. Although the July inflation data were confirmed to have stabilized, it is likely that the Fed will make a policy shift towards lowering the speed and extent of monetary tightening immediately. The current price level is well above the long-term average of 2%, the Fed's inflation target. Despite concerns of an economic recession, the U.S. labor market is booming, with an increase in the number of employed people. Recent employment conditions in the United States are unlikely to plunge the economy into recession, even if strong monetary tightening remains intact. A slowdown in CPI in July could be a big relief for the Fed. If inflation continues to slow, the Fed may start to slow the pace of monetary tightening, which could trigger easing. Some experts are skeptical about whether the recent rally will continue. The current market reversal is uncertain as the U.S. Federal Reserve is still tightening monetary policy and inflation levels are still high. However, Fed Chairman Jerome Powell noted that the recent rate hike has had a significant effect